Okay, everybody, good afternoon. It is Friday, January 5th, 2018. It is 4:12 p.m. New York time, and hope everybody's doing well. Just want to make a video. Unfortunately, this is another reactive video, and I apologize. I had a busy day today, and this morning I just wasn't able to get one out ahead of the news, but it doesn't matter because it's still good information here. And I just want to make this video just briefly regarding the Canadian dollar employment news and also the U.S. non-farm payroll news that came out this morning, and just show you the charts, etc. So first of all, for non-farm payroll, so here I'm on Forex Live, and this was the story they posted, or the headlines when they posted. And basically, it was a mixed bag. The number came out lower than expected in terms of the actual job number. It was 148,000 versus 190,000 expected. And coming off the ADP number that was much higher on Wednesday, this was probably a little bit of disappointment to the market. But it wasn't terrible. I mean, that's still not a bad report, but it was a little bit of a disappointment. The participation rate stayed the same. The unemployment rate stayed the same. And then you get down to wage data. It came in at 0.3% increase, which was what was expected. But you can see there was the average hourly earnings year over year and month over month from the last report were revised down. They had 0.2 from the last one, month to month. It was revised down to 0.1. The year to date was 2.5. The previous, actually that one stayed the same. I thought they revised that one down. Oh yeah, here it is here. 2.5 versus 2.4 revised down. Average weekly hours stay the same. So it wasn't a terrible report, and the underemployment rate actually ticked up a little bit. That's the U6 number. Those are basically people that have either stopped looking, or people that want to work full time but don't have it, etc. So anyways, so it wasn't a terrible report, but considering all the headlines lately about the economy and all that, I think it was a little bit disappointing. And so, but it was a mixed bag, and you'll see that on the charts. For the Canadian dollar, on the other hand, smashed the expectations. They were expecting only 2,000 jobs created. It came in at 78.6 thousand, so way over expectations. Participation rate ticked up a little bit. It was really across the board. Everything was good there. The unemployment rate went down from 6 to 5 point. Actually, they were expecting 6. It went down to 5.7. So that's certainly a good number too. And as the report says, sizzling job numbers 2 months in a row, which is going to, of course, fuel speculation about the Bank of Canada hiking rates in a couple of weeks. So that is kind of the tale of two stories. And so now if we look at the charts, so this is the Euro Canadian. This is what I was looking at this morning heading into the news. And as you can, this is my demo account, but I took this on my live account too. I went short just before the news came out, and you can see, that bared out. From an ELliott Wave standpoint, this whole pattern here is either an ABC or a 1, 2, 3. This could be, an ABC this is the daily chart, so of course this is a very long time frame. But you can see this impulsive move down, then this is a clear 1, 2, 3 up, which is a corrective move up. And then looking at this move down from here to here, and at the very minimum, I would expect, if this is an ABC, this would be the wave A, is about 460 pips. I would expect if this were just so if this move here is just a C, then I would expect this will go down another, from where it is now, will go down another 100 pips, and then it'll stop. But if this is a 1, 2, and it go down for 3, then this will keep going. But the minimum expectation for me is that, again, this is an ABC, and with A and C being about the same length, 460 pips takes you down to, about the 148.46 area. And we came a little bit close to that today, but we only went down, we're down about 268 pips. So I mean, we still got another, 200 pips to drop here. And so if we drop down a little bit on these time frames, So here's the hourly chart, and this is probably where the market will close, somewhere over here, because it's late in the day now anyway. So, and this is the C. If this is a C, then we've got wave 1, 2, 3, 4, and then we'll go down for 5. We have a flat correction here for wave, a flat correction basically for wave 2, and now we're going to have a sharper wave 4. So this may actually go up a little bit more, and then we'll continue down. We see the CCI indicator showing that we have a compressed CCI, you know, all the lines compressed going down, and now we're going up spread apart, which is indicative of a correction. So this is not unexpected after the big drop like this, profit taking heading into the weekend, but this will continue down after maybe a little bit more correction early next week. And so so that's why I took that one. The pound Canadian I also took, looked very similar. I thought I had it next to it, but yeah, here's the pound Canadian, and again, I took this trade just before the news came out on both accounts, and the same deal here. It looks very similar to the euro Canadian. This is a 1, 2, 3, 4, and we'll go down for 5, and that's where I'm expecting. Now I have this label as a larger trend. If I zoom out a little bit, this is the 12-hour chart. 1, 2, 3. So I'm looking at this whole move down from this high to where we are now is wave 3, and so that's why I've got this 4 over here, because it hasn't happened, you know, the 5. I'm expecting that this wave 3 will go down and touch probably about to this trend, to this horizontal line, and then we'll see another correction back up, and then we'll probably go down again for wave 5. But this current move, I'll probably look to take it down to about this area, and then I'll look to exit, and then maybe get in short again after probably a more substantial correction. So there's your ELliott Wave pattern in place for the pound Canadian, and those are the two that I took. I did not the Canadian Swiss. I didn't like the looks of it because the Swiss has been very strong, so that actually didn't really appeal to me. The Aussie Canadian I didn't like. The Kiwi Canadian, like the U.S. Canadian, would have been a really good one to take. I didn't because you know, of course, I'm not sure what non-farm payroll is going to look like, and you could really have a conflicting reaction with both sets of data coming out at the exact same time. But in hindsight, it would have been good. But I mean, it looked like these basically. So, and the Canadian yen I didn't take because I felt it was already approaching the end of a trend. Although this is correcting, I think that will go back up again next week too. Here's the spike on the news, and then now we're kind of drifting down, and it's basically the, you know, the flip opposite of the euro Canadian. So, and probably will go back up again, but I actually might look to enter this to the upside and maybe grab that last piece as it goes up. But I did not take that one initially. I just took those two I mentioned. So so that's that, and then really brief on the U.S. dollar pairs. So this is the way I had it labeled going into the news, and that I mentioned that maybe when I was looking at this, that maybe this was an ABC. We had this downtrend here. This is the 4-hour chart. You can zoom out a little bit. That this was a 1, 2, 1, 2. Then this started wave 3. This is wave 1 of 3, wave 2. So actually, you could probably slide this over to here. This was wave 1 of 3, then wave 2. Here's 3 of 3, and then we had I was looking at an ABC correction for wave 4, and then down. And it really didn't do that. And again, the news came out very mixed. So if you and ultimately this might end up being what it does. I was expecting it to go up to around where this 5 is, this arrow is, and you know, have it rally up to this area and then go down. But it didn't do that. It really didn't do anything. So if we go down to the 2-hour chart, the hourly chart, here's where the news came out. It's basically these 3 candles, and you can see we're almost unchanged for the day. The news came out in about halfway through this candle, and then the market went down, then it went up, then it went down, and now it's sitting, you know, about this level. So it's almost at the point where it's unchanged for the day. And again, that's very indicative of the fundamentals, where there's a lot of push and pull going on in the market, and there was no definitive direction. And I kind of saw that, which is why I didn't take any trade going into this, because I didn't feel that there was a clear path on the patterns, and it turned out to be correct because there was a lot of inconsistency on the news release. So so I did not take it. Here's the Euro Canadian, and again, this is the daily chart. If we go down a little bit, so here was the news, and again, this would have been a good one to take. Looks very much like the Euro Canadian, because again, the initial reaction on that dollar news was negative, so it spiked down, and the strong Canadian news definitely trumped any of the positive news for the dollar, for NFP. So the market pretty much ignored NFP in this pair and just sent it down. And again, it's correcting back up. This will continue down next week at some point. We may see a deeper correction first, and then get an ABC, and then it'll go back down. But the CCI again is very telling. Again, compressed going down, up, spread apart, and then we'll get another push down. So, but I did not take that one either, because again, I don't like taking that pair when both sets of news come out at the same time. I mean, if the news had been completely opposite, mirror image, like if you had taken that Canadian news and then the U.S. dollar news was completely all negative, I would have jumped in on this short. But because the dollar news was not entirely bad, I didn't feel this was a good trade. Although in hindsight, it probably wouldn't have been bad, because the Canadian news was so positive. That definitely took precedent. But that's a decision, and there still might be time to get in on this. U.S. yen, again, this is a yen pair, and again, this did absolutely nothing either. Here's where the news came out, and it kind of drifted down, and now it's pretty much unchanged on the day, although I still think this will go up a little bit, but I really didn't have any interest in trading the U.S. yen anyways. And then here's lastly the euro dollar, and which of course is the exact opposite of the U.S. Swiss. And I still hold to this pattern I have up here, which is this is the purple is the larger trend of this whole thing. So this is the 1, 2, and then this whole move up is wave 3 in the aqua color, and that we're going to see a correction down, and then this will continue back up for wave 5. Or this might have been the wave 5 of 3. Now we'll correct down to maybe this area, and then we'll go up, and that would be the purple 4. I'd have to move up to here. But I didn't think that this wave 5 actually was long enough, because if you look at the aqua wave 1, which is this right here, and then you compare it to this, wave 1 and 5 usually are about the same length. It's not a rule, but you can see this is much longer than this, so that's why I didn't think that this was the end of it and it would continue up. But either way, I think there'll be a bit more of a correction, then it will continue up, and it's just a matter of whether that's the overall wave 4 and 5, or if it's just the wave 5 of this wave 3. So, but either way, I think we'll correct a little bit more. If we go down a little bit on this pair and look at this correction, to me this looks like maybe an ABC. You got an A, B, and now we're going down for C, which means we'll probably keep going. We could go down to maybe this area right here, and then I expect this to bounce. So I'll keep an eye on this next week. I won't be looking to jump into this right away. I probably will let this go down and see what happens when it gets to this area, and see if it might be worth trading it at that point. I didn't measure this, but let me just see here. That's about 50 pips, and then off this high, this is longer. This is 80, so it doesn't really work out. So we'll see. So 50 pips off of this high takes us to about here. So I mean, we could potentially just go back to this low and then have it turn around, but bottom line is that I think it will go down a little bit more, and then we will bounce back up at some point here. So anyway, so that's it, guys. Like I said, a mixed bag for the U.S. dollar non-farm payroll, which is why I didn't trade it. The patterns weren't really clear to me, and I didn't feel it was worth trading into those. But the Canadian pairs, looked good going in. And the other thing about the Canadian, just really quick, if you look at the Canadian numbers have been pretty good, and going into this, this is next week. Sorry, let me see if I can go back here. Going into this, the expectations were so low. they were only expecting, like I said, 2,000 on Forex Factory, only 1.8 thousand after having 79,000 the month before. To go from 79 to 1.8 is a huge drop. So anything, even if it had come in at like 25, 30,000, it would have been a good number. But I mean, it smashed it. I mean, it was almost as good as the prior month. And so that's why I felt, not only were the patterns suggestive of a good number, but the expectations were so low that any green here was going to be positive for the market. So the other number that came out was the Canadian trade balance. That was actually negative, worse than expected, but the market completely ignored that in light of the unemployment, the employment numbers, because these are much more important numbers for the market right now, because the Bank of Canada is considering more rate hikes, and employment figures are very key in their calculation to whether they want to hike rates again. The trade balance normally would be an important number, but in light of these employment numbers, the market pretty much ignored that. I mean, if this had come out positive, maybe that would have accelerated it even faster, but so maybe it dampened it a little bit, but really was not noticeable, because this is really all the market's looking at. So that's it. And again, here's the U.S. numbers down here. So that's it, guys. Hope that makes sense. Hope you liked the video. Like it, share it, comment. I really appreciate that. Like I said, there might still be some opportunity to get back into some of those trades next week once these corrective moves are over. So I'm going to hold those two shorts I have in the pound Canadian, the euro Canadian in the meantime, and look to exit those probably early next week on the next push down. So and then we'll see what happens from there. So that's it, guys. I hope you all have a great weekend, and I'll be back next week. And take care, and I hope you made some pips this week. Thanks.